Let's bring in David Bianco to talk equities with us. You going to bring him in here right now? Remarkable week.
Yes.
What does an equity guy do with all this non-equity stuff going on?
Right, for an equity guy, you've got to know everything in all the world nowadays. And one of the things two things that investors are concentrated on, midterm elections and quantitative easing, and the interaction of there being more Republicans in Congress and the Fed being willing to support more fiscal support.
Alan Greenspan did an op-ed in the FT, you'd think completely removed from the David Bianco world, and yet there he was saying all this free cash flow is not going into longer-term fixed investment. What's the animal spirit now of the CEOs that run the companies you follow?
Well, there's still a lot of caution, particularly when it comes to hiring and capital expenditures. And I think there's going to be caution on that type of hiring and investment, particularly investment in the U.S. real economy for a while. But I think what we need to have is policy that gives more investor and business confidence to at least invest where there are opportunities for growth. And that's internationally. And it's not a zero-sum game.
Yeah, but that doesn't help American jobs.
It does help American jobs.
It does? Tell me why.
Absolutely, because
we agree to disagree here. He did not say I'm right. Okay.
Well, directly, it may not help jobs, but indirectly, there are benefits. We have a lot of leading multinational companies, and if they grow their successful businesses abroad, they'll be hiring in the United States to support those businesses around the world. And stronger foreign economies, it's going to come back to the United States in terms of exports and demand for our technology and our capital goods products.
Last night, I spoke to Alan Greenspan. I don't know if you saw that, Dave. It was a lot of fun. Thanks to our team for that. At the Bloomberg Foreign Exchange Conference, the chairman compared some of the austerity measures currently being implemented in Europe.
I'm a Republican of Goldwater School, and I must admit that my party did not do a great job.
What happened? Okay, well, that's great. That's, Alan Greenspan talking about being a Republican. We flipped the videos there. We'll play that one for you again with Michael McKee. But you mentioned the politics. And I mean, even Alan Greenspan's involved in the politics. Does the market, is it quiet until we get past the election? Is it quiet until we get into 2011?
Well, no, not necessarily. I mean, I think first we have third quarter earnings coming up, and still that's still important. I think the earnings are going to be good, between $21.50.
I'm in your camp on that, by the way.
Yeah, I think the earnings are going to be good. There's some wild cards around the investment banking.
Free cash flow is still going to be good.
Quality of earnings is actually exceptional, and so yes, there's the earnings season. Then there are the midterm elections. I think it's true the market's getting excited about more Republican influence, not fully priced in yet, but getting excited about that. And then it will be interesting to see how a combination of more Republicans in Congress, say the government finding its inner supply sider, and the prospects of more quantitative easing, how that inspires animal spirits.
This is a trick chart. Rex, could you bring up the Standard & Poor's? The Standard & Poor's chart. Bring it up here. There it is. Now, this is a trick chart. The title, S&P 500, is flat for 5 years. Great. But the chart is the emotion recently, because we've been flat for the last 4 months as well as for the last 5 years. Are we going to break out above those April highs?
Yeah, I believe we are. I think we're going to see the S&P get to 1250, maybe 1300 by the end of this year. I think 1300, even a little bit higher than that, is a good intrinsic value of the market. And I think what you'll have happen over the next several years is companies take advantage of low interest rates from home and redeploy that capital into faster growing economies abroad and healthier industries and raise their dividend payouts. That should get the market higher.
I was talking to Bob Sinch of RBS last night at the Greenspan function, and he was laughing about how research reports are constructed. I saw this from David Bianco and I laughed. The S&P is not U.S. GDP. That wouldn't possibly be David Bianco saying to Ethan Harris, I don't care about your lousy GDP call. We're going higher with equities. I say that in good faith.
And Ethan and I work very closely together. And we are both concerned about the U.S. economy, the risks to it, particularly because of the possibility of a tax shock. We're both disappointed with the jobs recovery. But it's true that the S&P isn't U.S. GDP. There's the valuation to consider, and we're looking at PEs against interest rates that are at record low PEs against interest rates. And yeah, the S&P is becoming global. The S&P is more business spending exposed. There's a Japanization of interest rates and perhaps the U.S. economy occurring, but a globalization of the S&P.
That's a jargon alert, folks. We've got to go to that, please. Call that up, Rex. A Japanization
We debate whether it's Japanization.
That's like an expensive coffee table that I can't afford. What is Japanization?
I think it's a quick way to describe a world of slow growth, high savings,
slow growth,
low interest rates. Yeah. Predominantly, we're talking about interest rates, low interest rates for a long time.
I'm getting the feeling that you're not buying the idea of you're buying the animal spirit out there of business in America.
I am. I think everybody's been burned, and they're not going to invest at least until they feel a little bit more comfortable. And I think tax clarity would help on that front. But listen, these companies are in an enviable position. They've got great businesses, and I think they're just looking for the green light to grow them abroad.
We're trying to move here so fast, folks. When you see me do this, I'm talking to the producers in the control room because we set this up with like 15 charts, but we don't use them all. It's like the New York Jets. Okay. It's like an audible. Here's a balance sheet blues, okay? This is net worth to disposable income. That crater on the right side, David Bianco, is that my lousy equity portfolio or is that my lousy real estate portfolio?
It's both, but this time around it's more real estate. In the 2000, off of that peak, that was strictly the stock market. This time we got hit both with stocks and home prices going down. I think the stock market is going to go up, and that will help households feel better.
Camera guys, would you look at how gorgeous that chart looks on TV? Joe Johnson, just unbelievable. It's a beautiful chart, but there's a lot of pain there. How are we going to restore our 401ks?
Well, I think what we've got is we need policymakers to realize that America is a bunch of shareholders. And when we get more confidence on capital gains and dividend taxes staying low for longer, that will help a lot.
Can you come by for longer next time?
Absolutely.
Please do. David Bianco, Bank of America, Merrill Lynch. Great to have you here.